first try it this time. It did. Look at that.
How many days does Fonz need to be in Florida to be considered a Florida man?
Oh, there's not enough time for that. I think you need like at least 10 years.
That's what it is to be a New Yorker. You got to live in Manhattan for 10 years and you're a New Yorker.
Is that the
rule?
Does
it have to be Manhattan? Does it have to be Manhattan? I think it does, right? You got to live in the city for 10 years?
Don't know.
I don't know. I think it's Manhattan. You got to live there for 10 years.
People, Spencer, who aren't from New York. See,
I don't know who made that rule.
Yeah,
I mean that's just the way. I was at 11. I was like, all right, I'm good, so I can go to California now.
So you consider yourself a New Yorker?
I mean, whether I was there for 10 years or not, like I feel like one, I act like one, I have like that New York pride. I got the attitude, like. Yeah, I got it. Like I know my bagels, I know my pizza. Like
but Steve is not a Florida man, right? That hasn't happened yet.
Steve is his ambitions in life are to be. I mean, I think he's probably a Florida man. He was in Key West, so it's kind of like me. I'm from Miami. I'm not from Florida, right? So Steve was kind of like in that realm, but now that he's like in the mainland, like he's mainland China, not Hong Kong anymore.
I'm getting there. I feel like I'm not like quite there to have achieved the title, but I'm very close.
Yeah, you're pretty close, man. Especially now with your stint over on the West, like on the West Coast.
Right.
Like these are Florida men who have moved from Canada and Chicago and like New York. Like there are real Florida men where Strazza is. Key West is like different, right?
That's fair. I agree. Yeah. I've had a presence in the great state of Florida for over 10 years. I haven't maybe spent that much time here, but we're getting there. We're going to be there soon.
I'm proud of you, Steve.
We got a busy show. We got a lot going on today, so let's get to it, all right? Because we got things to do, places to go, people to see. We have a lot going on today, everyone, okay? We have Kenny Glick. We have a new guest on the show, David Trainer, the CEO of New Constructs. We'll be on the show at 9. We'll have Jason Purz pop in for a few, and then we're going to get off here, if we can, by 9:30 or so, because after this stream is over, JC and Strazza are going to take a quick, 5-minute break, whatever, get some coffee, get some water, whatever they drink, pop back on for a few minutes after the open, and do a little live trading. So we got a lot going on. Busy morning here. Guys, what is going on in your world?
Can you throw up slide 2? I just saw this and kind of made me laugh. I don't really know why I laughed at this so hard, but like, it just made me laugh. It made me chuckle. I'm like, haha, that was funny. Like, happy Monday, everybody. Like, I don't know. I thought that was funny. No?
What's going on with the Putins today?
Am I just a child and I laugh at stupid things, or like is this actually funny? I thought it was funny.
It's pretty good.
I think it's good.
Yeah. I saw someone say China U.S. made a trade deal for the 4th time. I chuckled at that.
Are we still talking about trade deals? Is that still the thing, Spencer?
We are,
right.
JC.
Yeah. Right. That is why the market is up this morning.
It's because of trade deals?
Yep.
Got it.
Yep.
Got it.
Mm-hmm.
And so
well, it depends which market we're talking about, because rare earth stocks are all down.
Ooh.
because of the trade deal, right?
I don't own any.
As if they didn't go up enough already.
Right.
I don't have any rare earth metal stocks, but this Bridge Bio this morning, I believe, is a phase 3. Look at me sounding like a biotech bro over here. Phase 3. You hear me, Strazza?
I do.
See that? That means that's the 3rd phase of trials, I believe is what they're referring to.
Oh, you're talking about that phase, not the phase of a trend. Got it. Wow. I have no idea what they do.
I have no idea what they do either, but my understanding is that they had a phase, and it was the 3rd. It was the phase 3, and there were some trials, and, people were happy about it, so
they're done.
That's cool, I guess. I don't even know. They could change their minds. I believe, I don't really know what's going on over there, but I like it. So I was at a Halloween party last night. And
did you dress up?
I didn't dress up last night. I dressed up the night before, Saturday. I was the Mad Hatter. And I was talking to this guy who's got a broker dealer. It's got about 100 million in assets. He's moved everything over to an RIA, but he's got like this legacy BD transactional 100 million he's trying to get rid of. And I'm like having like a serious conversation with this gentleman. I'm dressed as the Mad Hatter.
Yep.
Hard for him to take me seriously. I looked great, by the way. I had nothing to do with it. It was definitely my wife. You know, my daughter was Alice. The boys were Tweedledee and Tweedledum.
Oh.
And Morgan was the Queen of Hearts. Off with her head, right?
Yeah.
You know.
So no one was Alice?
My daughter.
Oh, okay.
Yeah, she was Alice, obviously.
Very cool. Very cool.
And then last night, I think she was a cupcake. And then the boys were Flash and Hulk.
How many costumes do kids need?
Well, my kids are a little bit unique because they're born on Halloween.
That's right.
So like Halloween's kind of like a bigger deal around here. Even though it's a big deal for little kids in general, it's even more of a big deal. So we have like 3 or 4 Halloweens around here typically, you know.
Hard. You go really hard.
And they just dress up all year round also. Like they're just always dressing up as things. You know, my son actually thinks he's the Hulk.
So I was talking about you.
Teachers told me. They're like, this kid is Hulk smashing everything all day.
I was actually bragging about your pumpkin carving skills this weekend to my brother and Fonz and Rose. I was like, you should see JC's pumpkins.
Yeah. It's an uncanny ability I have to carve pumpkins, which is
very
like
strange.
Most random skill.
Do you ever see the what's the best one you've done? The Sebastian?
The Sebastian years ago was pretty good. I'll have to tweet it out. People don't believe me.
Share that.
Yeah, I got to share that.
It's such a random skill to have.
Sebastian the Ibis with the old school, with the pipe, like the old school Sebastian. Yeah, that was a good one. And, you know, I've done all kinds of stuff over the years. I did a Miami Heat one that came out pretty good. Like the, you know, the ring with the fire. You know, that was good.
All right. Can we talk markets, please? Enough pumpkins. All right.
All right, ladies and gentlemen, we've got the Dow futures up 0.5%, 227 points for the Dow. New all-time highs, by the way. S&P 500 up 80 basis points this morning, pushing 6,900, good number. Up 55 points today. NASDAQ 100 futures up 1.27%. That's 300 for the NASDAQ 100 futures. New all-time highs for those keeping score at home. 25,833. We got 30-year bond futures down 1/3%, 118 and change. We got crude oil flat exactly this morning. Nothing happening there, 61.5. Copper up almost a full percent, 516. That thing keeps marching. Gold down 2%, 40.47. Silver down 2.5%, 47. Stuck under that 50 level for silver. Tried to make it, couldn't do it. That's going to be a problem moving forward, I think. Maybe not a problem, but that's going to be, you know, the resistance, and it could be resistance for a long time. I don't know. We got the VIX still high, but back under 16. This thing was at 29 just 6 days ago. 29 6 days ago, and it is now under 16. Believe it or not. Over in funny money land, Bitcoin making moves this weekend. 115,000 for the old BTC. We got Ethereum back above 4,000. 41.40 flat this morning. We got the old Solana. Solana just under 200 even. And total crypto market cap, Spencer Israel, inching higher once again, 3.84 trillion. 3.84 trillion. What stands out from this morning's futures, folks?
Nothing really from the futures, but there are like some, you know, we had a lot of weekend headlines on like the macro front. And so there's a lot of movement this morning on that. I mentioned the rare earth metals being down on this trade deal. Argentina is blasting off this morning.
How many sigmas on the Argentina? Anybody got a count on the sigmas?
No.
You know, I like when these things happen because they do the math, right? I love good math, right? So then they count the sigmas, which I believe has something to do with the number of standard deviations of this particular move, right? And the more standard deviations, the more sigmas. How am I doing, math majors? Is that about right? So anyway, I get all excited about
that's as far as I can get you.
Right. Got it.
You've gotten to the end of my knowledge.
When they do the math, and I love the math because they're like, well, if the markets were efficient, then this that's happening today would happen once every billion years or something like that.
Right.
But it happens all the time, right? Which is that's what makes me chuckle, right? So like math majors, can you guys give me the thing where you guys count the sigmas and then calculate how many times the Earth would get hit by a meteor? There's a higher likelihood for you to get struck by lightning 3 times in the exact same spot or some shit like that. I love it.
It happens all the time in specific things, though. It doesn't happen all the time in like the same thing and happens in
Right.
different
It's
things.
like it happens in oil or happen in the
Right.
Brazil ETF, or
Yeah.
today it's Argentina or in the Swiss franc. Like there's always a lot of sigmas somewhere, right?
That's right.
How many sigmas, math major? Aren't you like a CPA or some shit?
Not anymore.
Not anymore. Okay,
These
but one,
biotech.
that's like saying like, like you deleted all of that information out of your brain. Like obviously you did not. Like that shit.
Nah, you fucking lose it.
All right.
All right.
No, I remember a lot, and also not a lot too. But
So how many
like,
sigmas, or is this above your pay grade?
no idea. But I'll tell you, just in biotech lately, the individual names, a lot of sigmas. I mean, every morning you mentioned the Bridge Bio already up 14% this morning. There's a handful of others as well, but it's like every day we come in, new biotechs are just zooming. Look at the breakaway gap in the RNA this morning. But this is just the state
Well,
of
that's
biotech industry group. These are hot stocks right now.
well, Steve, they're getting
Yeah, they're up 40%
so
pre-market.
that
You're saying
because
there
they're getting
won't be
acquired.
more. You're saying there's a breakaway gap,
No,
no follow through because they're getting acquired. All right.
It's not
Can
going to
you,
go too much higher. Oh, there's a random bidding war.
Yeah, but show what's going on. So as biotechs are hitting new year-to-date highs, throw up slide 3 there. I mean, this when you look big picture, there's a lot going on there in the old small caps.
There is. Yeah.
So that was it the highest weekly close for, it was the highest weekly close of the year for the biotech index, right? And this was on Friday. And highest weekly close for the Russell 2000 ever. As a reminder, the Russell 2000 had its highest monthly close and highest quarterly close a few weeks ago. And so now we had the highest weekly close for the Russell 2000 small caps, which, is not indicative of deterioration in market breadth, but much more so expansion, which is consistent with healthy market environments. I got one more for you, Strazza. The slide 4 there. This might be a chart of the week. I don't know. I look at a lot of charts, guys. This might be the best chart. Might be the best chart this week. What do you think? How am I doing?
Yeah. Yep. Talked about this in the conference call last week.
New all-time highs. Equally weighted Dow Jones Industrial Average. So not 7 stocks, but all 30 on an equally weighted basis. The equally weighted NASDAQ 100, also all-time highs. Again, not 7 stocks, equally weighted. And the S&P 500 on an equally weighted basis, also hitting new all-time highs. So what does this mean for you guys who are not math majors and you're just dumb like me? What does this mean very simply? Very simply, you take those 7 stocks that they've been lying to you about, telling you they're the only ones going up, right? 35% of the market, whatever bullshit they're giving you. Let me tell you something. Mathematically, you could take those 7 stocks completely out of the equation. Pretend they don't exist, like literally like they don't exist. And the stock market is still making all-time highs, no matter how you calculate it.
No, it's really good. And then I think also just the resilience of the market to shake off that October volatility from a couple weeks ago, really impressive. We had some bearish evidence piling up. Things were looking shaky out there. And the broader market was just like, we don't care. Speculative growth, couple down days, and just dug in, bounced right higher. I really think all the risk on groups leading was big bullish evidence. And now you got the indexes following back to new all-time highs. It's a really big deal. So bulls back in control, back to rally mode, press the gas, get money mode, whatever you want to call it. Robert asks a great question in the chat. When is that happy hour? It's tomorrow night at 5 o'clock. 5 o'clock in Bonita Springs. So be there. But you can't have any food because you're talking shit.
So Steve Strazza hosting a happy hour in Bonita Springs.
By the way,
Multiplier
not in
is
Florida.
hosting a happy hour. We open it up to ASC premium members as well.
Wow, this is like a fancy thing. Can you I didn't get the invite, but can you throw up those small cap indexes 6 and 7 there on the deck? Because it's not, when you think about the Russell 2000, right? For me, it's like, all right, well, if this thing's going to break out, like who's going to drive these things? Like who are the leaders within the small cap space that are driving the new all-time highs in the Russell 2000 small cap index? And I'm seeing small cap industrials continuing to lead. Notice how the Russell 2000 index is making new all-time highs now, but the industrials, small cap industrials, have already been making new all-time highs, exceeding those 2011 highs since last year, right? So this has been going on for 2 years now. So industrials have been a leader in the small cap space for a while. They continue to be. And then the other one, people forget just how large the technology exposure is in the Russell 2000. What percentage of the Russell 2000 do you believe is technology?
I would
Strazza,
say
don't look.
15%.
What is it?
I would say 15.
16 and a half. Good call. Just under the 16.9 in financials. So for all intents and purposes, go to the technology. Go to the technology, guys. There you go. For all intents and purposes, the technology weighting in the Russell 2000 is the same as financials, right? So
Yeah.
think about it like that. There's 260 banks in the Russell 2000 index. Technology has about the same exposure as that. So I think the technology aspect of small caps gets forgotten. I don't think by you or me, but I think in the general public, like you're like, I own a ton of small caps tech. What do you know, like you're in, but like a lot of people like forget that part. It's not just biotechs and banks.
No, there's a lot of small tech for sure.
And industrials too, obviously, but you know.
And I think another good index to look at is the Russell 2000 growth, which looks like it's about to break out to new all-time highs today.
Basically, you know, think about it like this. Financials, technology, healthcare, and industrials are the big four in the Russell 2000. They all carry about a 16% weighting, all four of those. So you got regional banks, you got biotechs, you got small cap tech, and you got small cap industrials. Like those are your big four that move the needle for the Russell 2000 index. And then the rest, and then discretionary after that, like a far fifth, and then the rest, right?
And now, for the first time this whole cycle, they're all working. They've all become leaders, those groups.
Yeah. So there was an interesting there was an interesting series of data points that have been coming out. Throw up the new slide too. You know, we're seeing commercial hedgers buying crude oil very aggressively. We're seeing speculators shorting crude oil very aggressively. You know, here the Brent crude oil short positions really exploding here. You know, when I think, you know, I like to think about where everybody's wrong, right? Like where are people most vulnerable? You know, there were small caps, if you recall, several months back. And people were like, oh, JC, you small caps suck. I'm like, yeah, I know. Everybody agrees, right? We're buying them, right? That, you know, the short sellers were very vulnerable in the Russell 2000 back in June, July, whatever that was, a few months ago. And, you know, we're seeing that unwind transpire. And I think it's got legs, right? Because from extremes, you know, we're not in a reversion to the mean business, but more so reversion beyond the mean. And so, you know, I think the small caps got legs. You know, where do I think the market might be most vulnerable? You know, right now, some corners of the market that you know, you got some weird things going on. I think energy. I own one energy stock. It's not even like a real energy stock, right? It's like a fake energy stock. It's like the software of energy or whatever. What do you think? Should we be buying more energy?
You're saying positioning is bullish, though.
Positioning, the way it's set up, is bullish, but the investors are short, right? So they think they are, you know, behaving bearishly, which makes me want to buy them.
Yeah.
You know,
Commercials are long.
Very.
Yeah. So I think you got to watch energy. And as soon as you get, you know, that green light from price, then you got to be all in on this group. And you could probably start jumping it and getting ready now.
I mean, I've tried. I mean, I'm in a little bit, but I'd like to be in a lot more. I got one more chart here for you guys. But yeah, I mean, I'm looking, you know, sector rotation is the lifeblood of a bull market. Everybody gets a turn, right? You're seeing it in healthcare. Healthcare, best performing sector over the last month. Like, think about that. You know, like healthcare sucked for so long. Now it's the best, right? It went from the worst for so long to the best, right?
Energy,
think about it, just like that.
Energy will have its time. Healthcare looks
and
fantastic.
energy will have its time. That's my point, right? You just saw it in healthcare. I think energy will have its time. You're seeing it in materials. Small cap materials are great, by the way.
Yep, they do. And I'll tell you, the banks are back as well. So all of these values.
Ooh, the banks are back. Tell me more, Mr. You know, Steve is our, you know, our bank correspondent around here. You know, Steve knows what's going on back there.
You still have to be incredibly careful around regional banks. And, you know, I worry it's probably not going to be any outperformance there in the short to intermediate term. But the big banks, the Citigroups and Goldman Sachs and Morgans, JP Wells, they look incredible. So good. So I think Citigroup's coming out of this coil as we speak that it just looks. We already have a trade on, and I kind of want more because this chart just looks phenomenal. And when you zoom out on Citigroup, it's climbing up the right-hand side of its financial crisis base, just a monster base there. Things shaping up good for the big banks here.
So I'm at the Barnes and Noble with the boys. Right.
Nice.
So daughter's got a birthday party at it's like this thing where like they make the girls like they do their hair and the makeup and they dress up and they do like a runway show. It's like a whole thing. Throw up the new slide too if you can, guys. So I'm with the boys just walking around the mall. They love bookstores. So we walk into the Barnes and Noble so that they can get a cookie, daddy can get a coffee, you know what I'm saying? So I go in the back, right? They got doors in the front, doors in the back. So I go in the back, and in the back is where they got all the magazines. So what do I see there right next to Us Weekly and The Onion, which as it turns out has a print edition. Who knew, right? So you got The Onion, you got Us Weekly, and the old Economist magazine just staring right at me, telling me about a coming debt emergency, Steve Strazza. Debt emergency. Sounds so scary.
What's the emergency debt? Did you take a peek?
No, I didn't. I didn't have time for that, but I did have time to take a picture, just snap it, because people don't believe me that this happens in my life. This is like the trading gods like trolling me. They're like, "Oh, GC's just trying to have a nice little Saturday with the boys, just walking around, get some coffee, maybe scoop up a dinosaur, you know, just nice, just minding my own business." And then the market gods are sitting there. They're like, "Let's fuck with him. Let's throw this in his face." You know what I'm saying? I'm just trying to live, bro. I'm just trying to live, and this is real life, Strazza.
This is good. That's bullish stuff. That's exactly the kind of cover you want to see. They're probably talking about private credit. Great.
I bought one, by the way. I had to add it to the collection. Right? I mean, you know,
you got
coming debt crisis. This is like the recession from 3 years ago that was 100% guaranteed that we're still waiting for. I think a few years from now, we're going to look back at this. Remember that debt emergency that they were telling you about? Remember that?
Yep.
Add it to the collection. I'm doing like a spreadsheet where I'm gonna put all my magazines. How many magazines do you think I have?
You got to track which ones had the best, like which ones gave the best signal based on the price action and the trailing 12.
You know what the best is? I'll tell you what the best is. The best is when there's multiple at the same time, where you get a time cover, you get a Newsweek at the same time. When you get multiples, like now, like that's really powerful.
But if you have them in a spreadsheet, you could easily see exactly like how they test out.
I don't have a spreadsheet, but I've been digging through some old boxes that I have from California. I found some new ones. Like I'm like, oh, nice. I forgot I had that, you know? So I got some good ones. I got one more chart, then we'll bring on Kenny. Throw up slide 3.
Hold on. There's a big question here by Wavy. I know this isn't a macro show, but have you guys read what came out of China's plenum meeting and 5-year plan for 2026, 2030? No.
But we're gonna ask Edward. Yeah, no, we're not, and we're never gonna read it either. So just FYI. But we got a guy. We're gonna ask him. Be like, "Yo, Edward, what's this guy talking about? Tell me about this plan." All right, we'll bring in Kenny, but throw up this chart. Throw up slide 3. We talked about it last week, but we just got to reiterate that high beta making new all-time highs relative to low volatility is not something you see in bear markets. It's not something you see in unhealthy markets. High beta outpacing low volatility is very consistent with healthy environments. And we're continuing to see new all-time highs. So, you know, this is, you know, if you're looking for a chart to potentially roll over as an indicator that, you know, something might be changing, you know, this is one that we've been watching, and it has not rolled over.
No, the risk ratios, anything on risk appetite has looked incredibly bullish even through the volatility earlier this month. The only thing that really cracked there was credit spreads, but all of the risk appetite ratios, especially the ones in equity markets, just kept zooming higher.
Yeah, and those spreads came back pretty quickly. I mean, those credit spreads really do look like regional banks, don't they?
Man, do they move fast though. Yeah, and high yield back basically at new cycle highs on an absolute basis here.
Yeah. All right, let's see what's moving intraday. Bring them out.
It's been a long time coming. They ain't come from my club, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Mr. Glick, hello, sir.
What's up?
Orange for Bitcoin today?
Sure.
You know,
How
I
are you?
think orange is my favorite color. I think I've decided. My kids are asking me all the time now. Like, they're like, "Oh, Daddy, what's your favorite color?" Like, they literally ask me every day. I'm like, and I just say stupid things. I'm like, "Oh, tawny or garnet." They're like, "What is that?" You know. So I think it's orange. I mean, you got the Miami Hurricanes. They're orange.
True.
You got the Miami Dolphins. They're orange. The Miami Heat have some orange in there. You got Bitcoin that has done very well for my family over the years. So we can add Bitcoin in there with the Miami Dolphins and the Heat and whatnot. You know, like orange might be my favorite color. I think I decided I got some orange Adidas that I wear all the time that are really comfortable. So, you know, shout out orange.
I know you don't like the Knicks, but you had the Knicks in
You
there.
know, I don't hate the Knicks. In fact, my father grew up a Knicks fan. So, like, before the Miami Heat came when I was a little kid, I don't really remember. Technically, I was a Knicks fan. Technically.
I remember Van Gundy holding on to Alonso
So-
Mourning's leg. That's always classic.
Yeah, great. I mean, you know, a lot of battles back in the day. Charlie Ward with the Knicks. Charlie Ward also played at Florida State, so I hated him then. Right? So it was like,
Oh,
you know, but I don't have any beef with the Knicks. I went to a zillion Knicks games, a lot of fun. You know, I look at the Knicks like the Yankees. Like, they're just there. Like, they don't bother me. I don't really root for them, but I don't root against them. They're just kind of there. And I like going to Yankee games and Rangers games and Knicks games, you know, all that stuff. So,
Speaking of games, I missed the best Jets game in 15 years. I don't even watch anymore. And
I heard it was pretty good. My father-in-law was telling me he's a Jets fan.
Oh yeah,
Yeah.
one of the biggest comebacks in Jet history. Wow.
How about
I think it's me. I relinquished my fandom. I got a Cam Scattaboo jersey, and the kid breaks his foot. I mean, I'm the mush. So what I want to, that's why I want to start by telling you that I'm the mush, but I want to give you this chart. Look at this chart. This is Rambus, one of the OG Kardashian meets the Andy Dufresne. You got to see this chart, my friends. This is Rambus over the last. This is a
There we go.
25-year chart. 25-year chart.
Look at that. That is the OG Kardashian bottom right there. That's the Andy Dufresne and Kardashian all at the same time. Am I right?
The only chart that was better than this, and it turned out to be a better trade, was the AMD. Same pattern. You know, you had your. By the way, I mean, this is going back to 1992. But AMD.
These are arithmetic scale charts to really show truly.
And this is also, you know, again, when I was a kid, I used to hang out the Fidelity office. I don't know what you guys did, but I would look through prospectus and learn about what was inside these funds. And I remember when it was just Wintel.
So when you were a kid, you would hang out at the Fidelity offices?
Yes, that's what I did for fun.
You think that's normal?
The insider holdings, the holdings of the mutual funds that were doing the best. Yes, that was my Saturday afternoons. But I learned about Wintel back in the day when it was Intel and Microsoft were the kings, and you had AMD, Cirrus Logic, Krusty. Remember Krusty, CRUS still out there. Yeah. But AMD was king for a while, and then it fell into hard times. And then this is what the Andy Dufresne looks like. You just basically go sideways, and then when you come out of that sideways pattern, this is what you're looking at. This was like a 20-year VWAP at the time. So fast forward to Rambus. It was kind of the same thing. This was the darling chip stock. This was the Momo stock, momentum stock of the 1990s, and everybody loved it. It was Qualcomm and Rambus, and then it just fell apart. And when it came out of this pattern, obviously we were buying it, and then it basically went in this monster chop for the last 2 years. If anybody's still in it, they're reporting earnings, I believe, tonight. And if you haven't noticed, in 2025, when a stock finally breaks its all-time highs, that's when it doubles. So I'm going to think this stock's about to go to $250.
Yeah, we're going back to those former highs. That's the target, right?
Right. But that's the easy part. I think now when it breaks the all-time highs, which should be this afternoon, you're talking about you're probably going to lift off for another 10 or 20%. So that's another 25 points. And if you get to the 150, what's to stop this thing from going to the 180 to 250?
Dude,
so
nobody's talking about Rambus. You're the only person I know that's been continuing to talk about this stock. Like, seriously.
Right.
Who talks about Rambus? You're the only one.
Right. And they're going to merge with Micron Technology inevitably, and it's going to be one juggernaut company. And I think
is that true, or you're just
that's just been my speculation for quite some time, and I just think it's going to happen. Just like Clove, if you guys were speculating with the Clove. By the way, if you bought the Clove with me on Friday, ladies and gentlemen, we can do anything we want now. That was a 40 bagger, so 2-cent option went to basically. Oh, sorry, it was a 20 bagger. 2-cent option went to 40 cents. Congratulations, everybody. If that was your first trade with me, 2-cent option with the 40 cents.
No big deal. 20 bagger on a Friday going into the weekend. No
and
big
there was
deal.
5 of them. We had Ford, Clove, Open, Qs, and the Intel puts. It was probably the biggest day we've ever seen, and my internet was out, which was a lot of fun. But Rambus, my friend. So here's what I'm suggesting. Look, they're reporting the earnings tonight. They're probably going to be awesome. The stock's probably going to break out. But buying options into an earnings report, the dumbest trade you can do. You're overpaying for the options because they're at their most expensive because the volatility baked in, and you're also guessing what the stock's going to do. Normally, I trade like you did with Intel yesterday on Friday. When you gap up, you play the fade, you make some money, and you just trade the earnings the next day. I'm going long. I'm going into the number, long the stock. I'm doing irresponsible things, but who's getting paid in this market? Irresponsible, psychotic bulls. And I think the stock's going to 250, so it can't go to 250 without breaking 127 tonight. So I'm buying, and I'm buying, and I'm buying more. And when it breaks 127, I'm buying more. And when it breaks 150, I'm buying more. Stock's going to 250. Let's go.
Kenny, getting a couple of requests here. Can you check out the new egg? NEGG. This thing's down 7.5% on the day.
My
maybe a little
short.
faux show, maybe a little faux show, bro. Action, maybe.
I can't get behind this name anymore. It was a great short. It was the biggest pump and dump that nobody spoke about in 2025. It crashed from 137 to 40. Between Newegg and Oracle, actually, one of my two best shorts of the year. I hate this stock now. I have no feeling for it whatsoever. The pump is over. The dump is over. I don't know. I'm leaving it alone. Stay away from it. Illiquid garbage. It's terrible. It's a fake.
Is it liquid?
Yeah, it's awful. Just awful. Yeah.
It looks a lot like Open Door.
Yeah. But speaking of Open,
exactly the same.
Open, I mean, I love this stock. I mean, I don't know if it's going to 30 or 40 bucks, but again, on a Friday, this is what I was trying to explain to people on the schmooze. Yeah, let me just show you this chart.
It's up 13% on Friday, up another 4% this morning.
Right. If you've missed this bull market, and some people have, like me, and again, as being a skeptic or just cashing out.
You haven't missed shit. What are you talking about?
I missed it. Trust me. Don't worry. Don't worry about me. The Glick family's doing all right. My dad's still long the Qs. He's buying everything.
Yeah, Kenny's trading intraday. He's not just sitting there holding Qs like his old man.
Right. So, but if you came in on this Friday, made up for every mistake you made for the last decade. No, that's how big it was. So the reason I love, and we started doing the schmooze on Thursday when options started becoming weeklies, and obviously we have dailies now, but preparing yourself and what you want to do on a Thursday night for Friday's action. This is one of those trades. You don't need a hero trade. You don't need a monster breakout on a Friday. All you need is a 50-cent move. And now that you have options that expire, obviously that day, but you also have half-point increments. So now you can get right in there, right in between the points. You were never able to do that, back in the day. So here you're buying 750 calls for, 20 cents that went to $1, but that's not the fun part. The 8s were at 0 by 1. You could have legitimately bought them at 1, but we wound up buying them at 2, and look where they went. They went basically to 50 cents. So you just need 40 or 50-cent moves on a Friday. I mean, who's trading Ford? We were. And we were buying it. And again, what somebody said, but I thought you don't like to buy gap up stocks. If you faux show, bro, I'm all about it, especially on Fridays when you got half numbers and whole numbers. You're buying 1350 Fords. They would have paid you to buy them. Nobody wanted them because you're not thinking Ford's about to tack on another 80 cents. But in this market, you got to think that way, and you got to keep thinking that way until something gives. And I don't think anything's going to give till 2028. But this is the market we're in. I'm going to call for Rambus to go to 250 within the next couple of weeks. And if you're smiling out there, go, all right, this guy's nuts. Has everything I said this year happened? So why not this one?
First of all, Kenny, you could be right and nuts at the same time. I would argue you fit the bill. You check off both of those boxes. Nothing wrong with that.
True. I'm nuts for ever shorting the market. I was doing my calculations. So far in 2025, I have shorted the market collectively about 20 or 30 times, and 29 of those have become absolute disaster trades. I hit one trade that if I just avoid shorting the Qs for the rest of my life, I think I'm going to be fine. I need
a wise man once taught me that shorting is short-lived and you're going to die.
Yeah, I wish I would take that lesson. But speaking of that, who's trading this stock? KDP.
Yeah, earnings, right?
Nobody's trading this stock. But again, if you're going to short, it's going to be this stock. So as it's going parabolic on earnings, that pivot is the VWAP now. So I'm just going to wait. I'm going to wait. You know, shorting is just, it's more or less illegal this year. It's really just a terrible idea. But let me just show you when it.
We're grateful for them. We're grateful
when
for
you can short, it looks like this. Here's Intel. You know, it was a wonderful short. We got paid pre-market. Stock opens up, rolls back over. And again, what I want to show people, and somebody asked me just in the news, some in the chat room, the anomaly print. So in the middle of the morning, right, Intel printed down here. And we said, hey, what's that? And I said, that's Fat Finger Freddy. Who's Fat Finger Freddy, you asked? It's the Matrix. The Matrix is pre-programmed. The stock already knows where it wants to go. The orders are on the desk, and the algorithms are programmed. So quite often, and now it's more than 50% of the time, so you have to take it serious. We're getting these out-of-the-money prints, and the stocks are going there. This is insane. I thought I was insane. I mean, I might be, but it keeps
happening. You see it all the time, Kenny. You show us a zillion times. It's not like this like random.
It keeps happening. So I'm just out there, and I'm trying to explain this to people. It's how now it's happening more than 50% of the time. It happens a lot on the Qs where we get this out-of-the-money print, and suddenly we go there. But you got to start looking out for them. A lot of times they're around between 8:30, 8:15, and 8:45. They'll have this print, and next thing you know, we're headed that direction. And again, you don't go that way just because you see these prints. But if the trade's already telling you, hey, you got to roll over on another,
that's your target.
That's your target. All right. Makes sense.
Look where you went. I mean, this is it's bizarre.
All right, go follow Kenny. Go trade with Kenny. Put on a trade with Kenny. That's
Do
literally the best way to learn. Put on a trade with him.
All right, and if you're looking to buy Rambus, remember, it's the dumbest thing you could possibly do, buying options into an earnings report. I'm doing it anyway. Good luck.
Okay. Hit thebid.com, guys. See you, Kenny.
I know we got David. We got David in the house. David, thank you. I know we got him in the green room. Just want to reiterate, on the open, like Tesla, we know for a fact that the world's worst investors are telling everybody, they're probably broke and have no money, but they are telling everybody that they should be shorting open. They should be shorting Tesla. You know, these are the types of names that we want to be looking to buy, because again, it's not about being smarter than everybody else. It's just about being slightly less stupid. It's easier to bet that humans are going to make poor choices than it is to try to like figure out the fundamentals of a company. Like betting, you know, against certain groups of people has been very advantageous to us. And, you know, those are some names that we want to be looking at from the long side.
All right. Well, let's see what David Trainer likes on the long side or short side or both.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Trainer.
What's up, fellas?
How we doing?
I love the comment that you just got to be, when the bear's chasing you, just got to be faster than the slowest guy, and that's sort of like the strategy for picking stocks. And you know, I grew up with I don't know, some nerdy guys on Wall Street before the tech bubble. And they're always talking about, look, in order to beat the market, you have to be smarter than everybody collectively, not just any one individual, but the whole market and all the people inside it. And that's why it's so hard and impossible. And JC, I like your approach, man. I think you're right. Like that's probably a little bit easier, is to be less stupid than some of the really stupid ones than to try to be smart.
Yeah, I mean, listen, you want to, I appreciate the look. I mean, you want to look at who historically does this the worst, and then try to do the opposite. So like there's a big four for me. You got journalists. Obviously they don't know anything. They're journalists. It's not their fault, right? They're journalists. So by the time they're writing about something, it's too late. The economists, right? And again, economists are wrong all the time. We know why. It's not because they don't know anything like journalists. It's because they're looking at the wrong data. They're looking at backward-looking data and purposely ignoring the forward-looking data in terms of the stock market and asset prices, right? So you got the journalists, you got the economists, you got speculators, right? You got asset managers and hedge funds. They're historically some of the worst out there.
You're forgetting the most important one, JC.
Who?
The sell side analyst, right? They're paid to get it wrong, right? They're not paid to get it right. They're paid.
Remember when they told you coming into 23, consensus was that the S&P was going to fall and the NASDAQ doubled instead?
Yeah. No, you're absolutely right. You know, and that's kind of like why what we've developed, this AI in terms of fundamentals is sort of counter trend perfectly, because nobody's doing fundamentals. People are really dumb about fundamentals. Why? Because it's too easy to ignore them. It's too hard to do the work. And so we did is create a technology that goes and does it for people, right? And we've been working with Harvard Business School for a long time, and they're like, hey guys, you don't have to read filings anymore. There's a technology to do it for you. And so we kind of have an opposite take of your last guy, but it marries very well with the technical, right? If you can get a technical signal and a fundamental signal to line up right, there's a whole lot more conviction you can have on a trade.
Yeah,
and that's the fundamentals.
Yeah, no, I mean, listen, I have a lot of friends who are having some amazing years, and they're doing exactly that. They're pairing, earnings growth and things like that in individual companies with strong technicals. I get it, right? There's no wrong way to make money. That's how I look at it. And so can you tell me a little bit about, AI and like Google, right? Because I talk to like, different people who know more about AI and tech than I do. I don't know anything. I talked to Dan Ives and stuff like that. I'm like, Dan, like, what's the story with AI? Like the United States, are we going to win or is it going to be China? Like, what's the story? And Dan just chuckles. He's like, no, man, the US is just crushing everybody because all of the biggest tech companies that are investing the most money in this stuff are all American companies. So like, that's why the US is dominating by so much. And I had never really thought of it like that. So I'd love to hear your thoughts on like what Google's doing, AI in general. You know more about the stuff than me.
Yeah, I don't know if I'd agree with Dan on many things, but certainly not on who's spending the most. I think China as a country, right? I mean, think about it, it's like the whole country is spending. It's like as if people complain about the US making an investment in Intel or whatever. China's government is pouring billions. They have small cities of like 30,000 people doing nothing but working on AI. Right? They can mobilize in a way that we just can't. Now, will they win or not? I'm not saying that they're going to win because of that, but it's not because of spending money, in my opinion, JC. I think the world is looking in the wrong place, and we're starting to see this shift change. The wrong place being, let's just spend gobs amount of money on compute, on data power, on data storage, on all that kind of stuff, just all the hardware, right? Because that's easy. Everybody can write big checks and it makes big headlines. What we're lacking is people with subject matter expertise able to endow these machines with actual real intelligence. Because the idea that you're just going to take the internet and pour it into an LLM model and all of a sudden it's going to freaking work, that doesn't work. It doesn't make sense. It's BS. So all this sort of rhetoric around spending money is as dumb as spending lots of money is on anything for that matter, right? It doesn't matter if you spend lots of money. You have to spend it intelligently. And so the firms that I think that are on the front end of that are Meta and Google. Why? Because you've seen Meta out there spending millions and hundreds of millions on acquiring talent for AI. And because that's where it is. At the end of the day, it still comes down to the people, right? Sure, in perpetuity, machines, if you make the compute strong enough, it'll figure things out. But let's face it, if you can figure out how to endow machines with real human subject matter expertise, now you got something that's special. And then Google, I like because they're model agnostic. They're not trying to sell you on their computer. They're just trying to sell you on a variety of computers. And so they're more data agnostic. And I'm a little bit biased because we have a partnership with them to build, on our AI. And our AI is specifically built on this idea that a small language model is better than a large language model, because a small language model focuses on a narrow enough domain that we can get our head around all that data and build rules, deterministic rules that we know are correct because we are 100% confident that the data is good.
So walk me through that. So what is it that you're trying to do? What have you done already? What are you, what are you building on? Like, can you explain that to me in terms of like how you're using AI? Like what exactly it is that you're building?
Yeah. Why don't I just show it to you?
Yeah, that'd be great. Spencer, can you share?
Yes, you can.
Let's see.
Let's see what we can do here.
Yeah, that'd be great because I'm always trying to learn about this AI stuff, and you got the agents, right? Like I need an agent. I feel like I need an AI agent. For me, like an AI agent is like, you remember like in Sonic the Hedgehog, like the video game in Sega Genesis back in the day, and that little squirrel thing would chase him around. That's how I think I need one of those.
I played Sega Genesis back in the day.
Sega. Right? Something like that.
Well, you're right, JC. I mean, your intuition is right. An agent is the same thing as a small language model. It's the idea that...
Oh, is that the same thing?
I think it's the same. Yeah, it's the same thing.
Nice.
Because what you're saying is that I don't believe that there's like this Superman of AI that can do everything. I need one that's focused on one bit of human activity, so that I can know I can trust it. And that's what they call. That's why they came up with this term, agentic workflow. An agentic workflow is having a whole bunch of agents that you put together to do something really cool, because you can trust what each one of them is doing.
David,
So
can you bring up whatever you're trying to show?
Yeah, let me try it again.
Yep, I keep seeing. I see our studio, but you have to change the tab or change the screen or something so that we can see the thing that we're trying to see.
I'm sharing. Let me try that again.
Yeah, I just want the AI to understand me.
There we go.
Like JC, here's the list of new 52-week highs today, and you should probably drink a Barbaresco with your pork chops tonight. Like, you know what I mean? I just want the AI to like talk to me.
Yeah. How about like which of the stocks this week is most likely to miss earnings? These big names, right?
Sure.
You put that in here, and we get an answer. None of these guys have a strong miss score, so they're all looking pretty good. This is what it says here. Based on the available data, none of the stocks are predicted to miss this week. They've got negative earnings distortion, which means that their earnings are actually understated. We can then say, hey, which of these stocks is the cheapest? And so this is an AI that's built to deliver insights, not just data. And so we're not like going to people and saying, hey, you can tell me, go look up what the total assets were in 2020. And this one is going to go beyond that and say, look, here are the cheapest stocks.
And so this is Gemini Enterprise?
Yep, this is Gemini Enterprise. They're the back end on the agent that we built. Yes.
Got it. So this is your agent that you're showing us here.
Correct.
And then how do I get access to this? How can I play with this?
Yeah, you got to stay good friends with me.
Got it. All right.
We're in beta now. We're rolling it out to some of our customers as we speak to start testing. But and so it does, I think, what people want, which is give insights. Like, how about which are the best stocks in the health care sector?
And how does it say what are the best?
Yeah, I was gonna ask that too, actually.
What is the definition of best?
Yeah, what is the definition of best?
Whatever I say it is. No, I'm joking. It's based on our methodology, the new constructs methodology.
These are fundamentals, or is this price as well?
It's got valuation and fundamentals, so it's both. So now it doesn't have price in the sense that it's got price action. And the reason they built it on top of our data is because, number one, we've got papers from Harvard Business School, MIT Sloan saying our fundamental data and predictions are better than anything else out there. And then we have a live traded indices and an ETF that are crushing the market. Like, for example, the ETF based on core earnings beat the S&P by like 8% last year.
And this is your ETF?
Yes.
What's the ticker symbol?
It is. I'm not allowed to give out. I'm not an investment advisor.
Oh,
so
fair. Yeah.
What I can tell you is that there is an index that tracks it, and that's called the Bloomberg Core Earnings Leaders Total Return Index.
Got it. And so the companies with more total, it's like an earnings growth metric is what you're looking at, basically.
Yeah, it's just a better measure of earnings. So if you
got it. So compared to the S&P 500, that includes those 500 companies, you're outpacing it.
Yes, that's right. Yeah.
Very
so
cool.
the methodology here's the index.
Got it.
And so the method, you can see it did very well versus the S&P. So the idea is really that if you're going to have an AI, then the best thing you can do is endow it with real subject matter expertise, like data that works, right? And so our ability to measure earnings better than other people allows us to predict stocks better than other people. That works. So you want to build an AI that can answer questions based on that kind of intelligence. And that we believe to be where AI is really going, JC, if that makes sense, right? Like, so that's why I say it doesn't matter how big your data center is or how much compute you have in your cloud. What matters is whether or not you can pair all that computing power with real expertise.
Yeah, no, I mean, you really hit home with me when you're talking about the like a small, like language model, language learning. What do you call it?
Small language model. It's like the
Language model is the same as like an agent. Like that's cool. I need one of those, to understand me. Like ChatGPT understands me a little bit, but it doesn't truly understand me like I wanted to. So maybe I got to get me one of these agents.
Get you an agent.
And so, how can folks follow what you're doing? How can folks get their hands on it when it comes out? Where can they, read up on, the process on what you're building and everything like that?
Just go to newconstructs.com, sign up on our mailing list, follow me on Twitter @newconstructs, and we're talking about it all the time. Because
can you drop the link in the chat there, Spencer, please?
Already did.
Amazing. Amazing. Listen, this is really cool, David. We got to have you back. I want updates. Can we do that?
Let's do it.
I want regular updates. Can I be a beta guy? How do I do that?
If you say please.
Please?
Yes.
I tell my kids, if you say please and thank you, life is just easier. Like people are just nicer to you. Like all you have to say is please and thank you. It doesn't cost you anything. Look at me. I'm getting an agent now. See?
It works.
I'm eating my cooking.
It works.
Nice. Very cool, David. Give us a stock. Are we buying Google? Is that you're using it? It's hitting the 261.8% extension as we speak.
I was going to ask you about this week.
Yeah, Apple and Microsoft this week, I think they're more likely to beat. I think Meta, Google, there's a little bit of too much hype in those numbers. They're spending a lot. I think Google's early in the AI stage. So don't get me wrong. I think long term, they're a big time winner. But Apple, look, I mean, the numbers are already probably raised a little bit because we've known that 17 is doing great. Microsoft is always sort of the underdog, like super profit machine. People forget just about how much money these guys make all the time.
It's crazy, huh?
Yeah, but I think Amazon, Meta, Google, I think they're. I like Google better as a stock. It's cheaper, but for earnings going into this quarter, I think they're probably going to be more likely to meet or miss than they are to beat.
If you throw up slide 2, and then we'll let David run. Throw up slide 2 there. Just throwing up some extensions. Market respects these levels. Just running into that 261.8% extension right here. So that's a big level. Doesn't mean the market needs to stop here. In fact, they're coming out with numbers and they jump over that resistance. You're looking at another leg higher. So this is just a key, also could be support on the way down, like on a correction. These levels all, tend to find a way to be relevant in these price moves. So we'll see. But there's a big level here.
Yeah.
We can agree on that. All right, David Trainer, everyone, newconstructs.com. Link is in chat. David, a pleasure, as always.
Appreciate it, sir. Keep up the good work. Come back and update us, all right?
You got it.
All right, adios.
All right. Before we hop, we got to talk a little commodities here. We got Jason Purrs in the house. Let's talk oil. Okay,
Thank
energy.
you. Yes.
Jason, you hear that? I hope you have charts.
Mr. Purrs, how are you, sir?
Hey, what's up, JC? What's up, Spencer?
Everything. I don't know if you heard, it's a bull market, Jason.
I keep hearing that, but wait, actually, I keep hearing the opposite, JC. You're wrong. I keep hearing that
it's a bubble.
It's a bear market. It's a bubble. We're all going to crash soon. So I can't
Guys,
believe
let this be a lesson. If you see a bubble, you go buy it. It's very simple. Bubbles are great. I don't know why everyone gets all their panties in a bunch every time there's a bubble. They're great.
Every great investor talks about it, participating in the bubble. That's how you make the most money in these situations.
Dude, life must be so hard, like fighting bubbles. Like, especially if you're right and it is a bubble and then you're not even in it. Like, that must suck, dude.
Yeah. I mean,
imagine waking up every day to that.
Well, that's what creates the bear porn, where they get on and they tell everybody, well, it's going to crash soon and so on. And, they're the same people that missed the run on the way up. And now they're going to try to short it the whole way up to make their money back on the way down. Just a problem. It's a problem.
All right. So here's my question to you, sir. Is the bull case for energy here the fact that sector rotation is the lifeblood of a bull market? Everybody's getting a turn. Healthcare is now the best sector. And it was like the worst, like forever. Now it's the best, right? So like everybody gets a turn in the bull market. Is energy next? And this is part of the bull case. Or is the rotation into energy part of a more defensive rotation and, a more cautious posture for the market? How do you think about that?
So I would say if we're looking at energy, once again, it's always got to come down to price. First thing that you and I always talk about, which is we need confirmation. We need to see something really happen there. For me, it's oil above 80, XLE above 101. But the one thing I want to say is how well energy, the whole sector, XLE has held up. Considering, bonds are starting to rally and all these things are happening, and energy has held up pretty well, considering also oil's been getting hammered. I do have a chart of gold, copper, and
Can
oil.
we
in
say
there.
that bonds are starting to rally? Can we say that?
Yeah, they're starting to.
I mean,
The
they're
long
in the
bond.
same goddamn range they've been in for 3 years, bro.
Look, here's my thought on it.
Rally's a strong word.
Look, if you look at the short end of the curve, look at the short end bonds. IXE or IEI and so on. Like you're starting to see those rally. Now, I'm long the short end of the curve. Very different from the long end of the curve. I am still short the long end.
Fair. I'll give you that. All right, deal. You're right.
But so when we're looking at all of these things, I'm just looking at the fact that, bonds are starting to make a little bit of a move. But I think just like you're thinking, JC, like bonds continue to move. Let's say the Fed cuts rates and they continue to cut rates. As money continues to loosen, this is just going to boost commodity prices. And I think a lot of the traders are seeing that. A lot of the countries are seeing that, which is the reason why you're seeing so much pressure on long bonds. For people out there watching, check out TLT. Compare that to IEI. You're seeing TLT is massively lagging IEI at the moment. Usually in that type of
IEI being the what, 3 to 7?
3 to 7 or
TLT's
SHY. Yep. Whatever you guys want to look at, but look at the short end of the curve compared to the long. We're seeing that divergence continue to happen. Usually what that's saying is, one, it's good for the market. It's a bull steepener, meaning liquidity is loosening up in the market. It's usually bad for the dollar. So that's also going to boost commodity prices. And also I don't want to bet against oil not moving here. Now, I'm not saying like it's ready to buy, but I am saying that when you see gold miners moved like crazy, then we have the silver miners. Then we have copper miners, palladium, platinum, lithium miners. Coal stocks are working. Uranium is mooning basically every other day. When I see an environment like that, the bet is, hey, energy should probably move at some point, or it would be the first time in history that energy didn't move with all these other subsector groups moving. So I still like the energy trade. I think it's going to take off, but you got to be very patient here and not just front run the move and just wait for these breakouts. They're going to happen at some point. Wait for the signals.
I want to see on a relative basis, see energy kind of dig in. They're still making new lows, and that could have been it, right? Because you're not seeing oversold conditions on the weekly, on the relative strength of energy. Seeing a potential bullish momentum divergence on the daily. So you're seeing the start of some divergences there, and that could have been it. Last week could have been the lows in energy on a relative basis, because this thing's been going down on a relative basis for 3 years, right? 3 years, yeah, really since the bottom of the market in the Q4 of 22. That's when energy peaked on a relative basis. It's been straight down ever since. So I'd like to see that turn, and like I said, it could be no oversold conditions on a weekly. Bullish momentum divergences on the daily. This is energy relative to the S&P 500. Commercial hedgers, talk to me about the hedgers, and then we'll hop for the day.
Oh yeah,
hedgers the positioning. What you thinking there?
Saw the Brent getting shorted pretty heavily at the moment.
You like that? Talking Brent futures here on the morning show. No big deal.
Yeah, I know you guys all love to check out the Brent futures, but for real though, it's right now we don't have the data from the U.S. futures at the moment with the government shutdown. But we do have the Brent.
What was the last time these bastards gave us the data? 2 weeks ago? 2.5 weeks ago?
Three now, I think. Yeah, 3 or 4. I mean, it's been going. It's ongoing. So, like, what's the wait?
Can you share with the folks, and to me anyway, also just from a week over week basis, the changes in that positioning, is it so dramatic? Are we getting to the point now where we're kind of curious? Right? It's been 3 weeks. Right?
I've been curious for a while. The thing is, like, you continue to see anywhere under 60, the commercials, meaning the smart money, they start buying like crazy. Anywhere under 60.
I'm saying not just in energy. Mm-hmm. I'm saying in across futures markets, like from a week over week change. Is it that big of a deal? But now after 3 weeks, it's becoming more meaningful because more time.
Yeah, so the rate of change is so important when we're looking at COT data. And when we see these big moves continue to happen, the smart money continue to buy like crazy, the dumb money continues to short like crazy, and that rate of change continues to move in a very big way very quickly, that usually leads to big moves that happen or bottoms that happen in these commodity markets. So I do think like we have the setup here, right? It's kind of like when you look at short interest. Is the setup there? Absolutely.
Is this the most net long that hedgers have ever been?
And Brent, yes.
In Brent, yes. And
Yeah.
in WTI?
I bet when it opens back up, we'll say yes to that too.
But it's close enough where basically.
Yes, we're very close.
So the dumbest money, in other words, the world's worst investors, asset managers and hedge funds, world's worst investors, we know, we have the data. They have never been more net short of crude oil. Do I have that right?
Yes.
And Brent, for that matter.
Yes. Brent at the moment.
Oil services, ETF, all-time high short interest. Explorers and producers, XOP, all-time high short interest. The XLE, energy sector index, also very high short interest. So is energy the area in the market that is most vulnerable for a squeeze, do you think?
Oh, absolutely.
Absolutely. Wow. Not even a flinch there. No hesitation whatsoever.
We've been watching this for a while, like we've been watching this build, and the sector is so hated. And it reminds me of like after 2016, everybody had an energy fund in 2016, and then all the energy funds kind of fell off the cliff. I'm sure your friends, my friends, like who had energy funds, they're gone. I haven't heard.
I don't have any friends that had energy funds.
I
have
did
friends
have
that work like on Millennium and stuff like that, and they trade energy futures in Texas and shit like that. But like
well, there was a bunch of them that popped up for a long time. I had some buddies who ended up starting a couple, and they made some money back in the day. But then once it got to 2016, they started going, "Oh, this year sucked. The next year sucked. The next year sucked." And then you get into 2020, and by 2020, they all quit. Basically that when oil went negative, they were all, hey, I'm out of the market.
And then oil rips.
Then oil rips, of course. And so now we're kind of at that same sentiment level where everybody hates it. It's been the most frustrating trade out there. It just chops up and down. I mean, if it's going to move, it could move in a big way. And it's like what you got to think about is everybody's on one side of the boat here. Everybody hates this sector. Yes, there's some people out there who talk about it, but really, if we look at the positioning, it is set up so well because everybody is short. Everybody hates it. And they're probably wrong because it's probably going to rip to the upside at some point and rip everybody's faces off. I would guess into year end. Here's the other thing to think about. Seasonality for energy stocks. They're very cyclical. And so getting into December, January, February, that's when we'll probably see this thing take off. November isn't usually the best month for energy, but December starts to pick up. January and February are also pretty good. So I would just, continue to be on the lookout for these breakouts. XLE above 101. Look at some of these international energy names. If you want to buy early, buy strength. Just buy something that's very strong, breaking out. The leaders will usually continue to lead. And so that's how I play it at the moment. Patience, but also, hey, if you need to front run it, buy something strong.
You think the best, like, you think we go out and buy calls, like going out to like Q3 next year or something like that? Give us some time in a specific, like a Chevron or like an Exxon, where there's plenty of liquidity in the options market. So like if it's not, like you don't need to go to like a offshore driller to get the beta on these little nothings. Like you could get the juice on the derivatives market on the bigger ones. Like that's kind of where my head is at.
That's what I think too, because I don't want to, when you see the beginning, think of the gold cycle that just happened. We saw gold start to move, and then what moved next? Well, the big mining names started to move next. It's going to be the same thing here. Like we'll probably see the biggest names, XLE names, the Chevrons, the Exxons. And then also I like the idea of buying the, out of the money calls. You could buy the whole sector XLE calls. You could buy one of the big name calls, but I would stick to the biggest names or the sector of XLE itself. I think there's a lot of money to be made there. I think the calls are very cheap right now. This thing's been range bound. There's been very little volatility in XLE and most of these energy names for a while. So you could make a lot of money. I think that's where the alpha is going to be. And I would go straight a year out. I would go straight a year out, 3 quarters to a year, and just let that thing run. But I think there's a lot of money to be made there.
I like it. The big question is when. The big question is when, before making like a big move, because I want to take a big swing at this. Like I don't want to fuck around. People think that traders, like the biggest, fear is losing money on a trade. Like that happens all the time. Are you kidding me? We lose money I mean, practically every day, probably, right? In something, we're losing money. It's fine.
Yep.
It's when you're right and you don't make it as much money as you should have because you nailed it. Like, that's what pisses me off, and others as well. So that's kind of where my head is at. I want to take a big daddy hack, but I don't want to just do it for the sake of doing it. I'm thinking when you get the turn on a relative basis, there's your signal. So that's what I'm looking at.
Turn on a relative basis, start to see oil really start to show some form of strength. The sector wise, looking for a breakout could happen. But still, like if we're talking calls, you might want to front run that as well. So I like that idea. I think it's more, just figure out whatever signal you're going to use, because this thing's going to take off at some point. And I think it's really worth taking some swings at, when you get those signals, because it might chop you out once or twice or something. But at the same time, like you're set up, like you talked about earlier, you've got all of these sectors, highest short interest ever. You have the COT report, dumbest money short as they can be. You have everybody hates it. The sentiment is terrible. It is set up to make a massive move. And when that positioning unwinds, like that's going to be a huge turnaround. And so there's going to be a lot of money made in the energy sector. I just don't want to bet against it with all these other, like copper miners are moving. I've never seen a cycle where copper miners move and then the energy stocks just lay there flat, or oil goes into a downtrend.
Last question, Jason, because this is something I'm thinking about. I love this, by the way. Thank you so much. You're the fucking man. Can the energy go up without the dollar? Right. So we've seen a pretty strong positive correlation with energy and the dollar for years now. Half a decade we're going on this correlation, right? Can we get that rotation into energy with the dollar rolling over and that correlation blows up? Has that correlation started to change already? What are your thoughts there?
Correlation has changed. So
has it?
Yep. It's starting to change. So if you look at it, so we talk.
You're running what, like a 20-day rolling, 60? What are you thinking?
I think it's a 10-week is what I'm running right now.
10-week rolling correlation coefficient. And it is near zero. It's a neutral.
It's not neutral yet. It's getting there.
And so this is really slow. This is 10 weeks. This is very slow.
Very slow. So I'm sure if you ran a shorter one, I always run them very long term. But if you ran a shorter one, sure. But you can see it rolling over completely even on there. So
then your answer, my suspicion is yes, energy could go up without the dollar.
Well, it's what everybody, correlations, intermarket just as good as anybody in the world. If you're looking at intermarket analysis or correlations, they change over time. Everybody got so interested. Okay, the dollar and oil are going to be correlated. It's like the oil is going to at some point come off of that correlation. I wrote about that on our report. I think it was
you've been saying that. Saying that. Me, I don't know anything, but you've been pretty confident about that.
I'm confident that it would change. Once again, anything can happen. So we don't know what's going to always happen in markets, but like correlations change, and that's been a historical one that's always kind of been. The dollar moves down, oil moves up. Yes, people start saying it's different. Okay, well, production in the United States went up so much, and that means that the dollar is going to stay.
I heard we're the biggest producers of energy in the world, America.
We're the biggest producers.
Dude, shout out America.
Yes.
Yeah, let's go, baby.
But at the same time, it's still not.
That's the drill, baby, drill that they're always talking about.
Well, we're not actually. What's crazy is we're not actually doing that. We're talking about it a lot, but we're not doing that.
Then how are we producing all this oil? Is that
we've been producing it? We've been the leading producers, even under Biden. Like we've been the leading producers for a while now.
All right, shout out America.
Yeah, we're doing that, but
hell yeah,
we're not the leading exporters. We're not doing other things that we could be doing as well with it. So at the moment, it's kind of an interesting thing, but the correlation is shifted. I would expect that to continue to shift as this commodity cycle moves on. As we get later in the cycle and we start to see like gold slow down a little bit, and copper, oil, and some of these other coal stocks and so on start to really make a move. I'm really excited to watch this thing happen, because it's really, these things move, and they move in a big way, and you make a lot of money in the commodity trades. So I'm excited for this one. This is going to be a big one.
Are you ready to take a big daddy hack in energy with us?
I'm ready.
That's just got the out of the money calls.
I definitely do.
I want to take a big hack. Like I want to be irresponsibly long energy. Like I want to. Like, that's what I'm thinking.
Zero DTE.
I got one energy stock. I mean, in my tactical stuff, in my long-term portfolio, I got all the big ones. Like they're in there, obviously Chevron, Exxon, whatever. So I'm like in, but like it's so not meaningful that I want to take a big. And, that makes me think about it. So I'm not alone in this, right? A lot of investors have no exposure to energy, right? I'm not the only one. Granted, I've had a lot more exposure to energy in prior years, but right now I got nothing. I got one energy stock, and then I got a few. I got maybe 2-3% of my long-term portfolio in energy. I got nothing, right? So like that makes me want to take a big daddy hack even more, right? Because like, let's say it's like, oh, I want to take a big daddy hack in tech. Let's just say, do I need to take a bit? I'm in, like biotech at this point. I got more biotech stocks I've ever had in my life. Like I'm in. Energy, I can't say that about. So like that's, it's selfishly, I'm thinking about that for that reason. And I know there's a lot of people out there that are just like me.
Yeah, I mean, I'm underweight too, so it would
Yep.
it would be
S&P 500's underweight. Everything's underweight. So,
everybody's underweight energy, myself included.
Yep.
And I'm okay with that, but like I'm getting a little impatient here. It's time.
When it starts to turn, I think it's just time to go
it's like
in.
porn. It's
All
like
right.
porn. You know it when you see it. Right?
Okay, Jason, be sure to tell us, or at the very least, tell your members at the Gold Rush. Guys, Jason Perez, everyone, thank you for joining us. Let's hop. All right, here's what's going to happen. We're going to hop right now. We'll give JC a few minutes. Give Steve. I know Steve just put out a trade. Give him a few minutes to get his act together. We're going to come back on YouTube and Twitter and stockmarkettv.com in like a couple of minutes, and Steve and JC are just going to rip through charts and kind of do maybe some training through the open. And I mean, we're open now, obviously. So let's get out of here. If you're watching us on YouTube, the stream will redirect automatically. You don't even have to do anything. It'll automatically take you to the new stream. So just don't do anything. We'll see you in a few. All right. Thanks for watching. Thank you, David, Jason, and Kenny in chat. And we'll see you all in a few minutes. All right.
I'm putting on a trade. Looks like Strazza is too. All
right now? Oh, boy. Save it.
Live.
Run it. I can't take no loss. I don't even know what it costs.